right, testing audio. All right, testing. 1, 2, 3, testing. Testing audio. 1, 2, 3. Testing audio. 1, 2, 3, testing audio. All right. Trying to do an audio check. I'm not sure if anyone is hearing this. If you don't mind just letting me know. Great. All right, thank you. So, welcome. I've got a little refresher, maybe a little bit more elaborate than we've done before on the simulcast. This is for non-members. Now, I've invited members, already viditrade members, to join us just to get a little refresher. Always good to discuss. It's not mainstream technique, etc. So always good to have discussions and see questions and answers about it. But of course, we're also going to that's going to be in the main room. Just so you know, what you're looking at is the chart. This is the vidi room. This is the vidi room where, if you can see these blue arrows, that's the buy and sell signals, or what I call inflection points. They are inflection points. Let's get the legend up here. I was talking. This is the inflection point, a blue arrow with up or down, one or the other. It's only one other direction, that's sideways. We only trade long and short. So this is where the pattern is telling us that it is trying to reverse a trend or extend a trend predictably. A trend may have already been underway, but some of the rules that I used don't let me identify where it's actually extended so far that we can rely on it being in play, that it has several points of productivity at least, sometimes more. But that is an inflection point. Again, buy or sell signal. That's not to say that's where you execute. There is the inflection point that I use on the chart for my purpose and for yours to identify where we have a greater degree of confidence that trending is underway. You can call it a buy or sell signal. I call it a buy or sell signal because it's nice to attach a verb to it. But the the other action is execution. And that's not necessarily where you execute, if you're executing at all. If we have a target in mind, then, and for instance, the target is being met with RSI diverging negatively, that's a candidate for fading. So that would be the execution, the short entry right there. Or there's a pullback limit. We're going to discuss that in a moment, the reaction limit. Kind of a stop, but again, more like the inflection, more like the buy-sell. Not necessarily the actionable point, but for the purpose of identifying what the chart is doing, what the sponsorship is trying to do, that can be actionable, or just confirmation, or a warning to start getting actionable. But it's a reaction limit, and it's red, thicker solid red, or green. Thicker solid red or thicker green. There's red. There's green. Notice something about them. The red is used when there's a buy signal, and the green is used when there's a sell signal. So, in other words, a single word for either is the reaction limit, or the bounce limit. How big of a bounce keeps the momentum, the signal's momentum intact, and how big of a pullback keeps this buy signal's momentum intact. This was a sideways day today, so we don't really get to see too much testing of a pullback limit, and then the trend resumes. But just for the purpose of further exploring what these are, we're going to go back to other sessions that did trend and see how these can be used for execution. But let's move on for the moment. Objectives. Notice how the blue solid line is slanted. That's going to be a level that maybe in real time, just kind of calling an audible as prices are developing, or noting that there was some relevance to that area. Maybe there's a timing window coordinating with a technical condition, but something where I will then also audibly say that this is potentially the peak, this is the predictable, number of different things, not too many different ways to say it, so that you can make a decision whether to hang on to a position or tighten stops. That's usually a good middle road. Can always re-enter long if you exit into strength and this starts blowing through. I'll certainly be characterizing that. But a slanted line is going to be a objective of sorts. And of course, the two technicals that we monitor are MACD and RSI. I like having MACD on screen. We don't really refer to it a lot. MACD, moving average, convergence, divergence. It is a technical indicator. I'm not going to do a technical indicator class, but it's basically the difference between two moving averages of two different periods. We're going to go with that. And then their difference is smoothed. So there's a signal line between them. And even then, I just use the oscillator, really. But that's a price momentum gauge. And then the RSI, which I use as a strength indicator. Any kind of indicator. I typically use indicators that allow me to compare one reading when price is at a certain level to that same indicator's reading when price returns to that level. So here's that indicator right here. Does that work? Yeah, so right here was a peak in price. No, that doesn't really work. Let's find another example. So here was a peak in price at the time. and price dipped enough for RSI to leave overbought, and then price returned to a higher high, but not RSI. Not only did it not return as high, it didn't even return into overbought territory above 70. That's a divergence. That's not a sell signal, but it is constructive to a sell signal. It's part of a sell signal if the other elements develop. So RSI and MACD are the two technicals that we look at. Bias parameters. Now this is the 1 minute chart. By the way, when you see this chart, this is how it is portrayed. This is how the charts are portrayed. The 1 minute on the right and the 3 minute on the left. They're the same vehicle. They're both the ES, the S&P E-mini. 3 minute though is on the left. And on the 3 minute, I mark the bias parameters. The thicker solid red and green lines are on the 3 minute chart. So I'm using the legend down here, lower left. The 3 minute chart is on the left. These are the bias parameters. Now, if you are, there we go. If you're a member, you get access to the blog, and you don't even need access to the blog. You just get emails sent to you from the blog. If you want the blog updates emailed to you. This is, for instance, tomorrow morning's bias strategy. That's what those bias parameters refer to. And this is them. So the two green bias parameters, 49.51, the bias up signal, the target 49.68. So if we come out of tomorrow's come into tomorrow's bias window at 10:15. At 10:15, 60-minute bias will trigger if ES is above 49.51, and its target will be 49.68. And if we come out of tomorrow's bias window at 10:15 and ES is under 49.42, then its target will be 28. And that seems interesting. It's also interesting that we're already trading down there overnight. Look at, I mean, these were calculated as of the close. These were calculated as of the close. This is post-close action here, suddenly stopping. It extended through the close, of course, with at least 2 out of 3 negative earnings reactions after the close. Google and Microsoft. Price tumbled from the cash session close, which was up here around 49.51, equated to 49.51. We were already tumbling into the close, and then through the close, and then and then through the Globex Open, and suddenly stopping coincidentally at the 49.28 bias down target. Tomorrow morning, we're going to be talking about the bias, and this is what I'll be referring to. And I haven't done this before for the simulcast viewers in YouTube, on the YouTube channel, but I'm going to have this posted there. I'm going to have this post available so that you can download it, you can look at it and review it. There's rules. It's not just the bias up, triggering bias up, targeting the bias up target. There's also interesting behaviors through the first 15 minutes, through the first 45 minutes that can give us even greater insight. It's very rare, actually, that the bias will trigger bias up or bias down. That's very rare. Much more commonly, a bias signal will hold its test through the first 15 minutes, or through the first 45 minutes at 10:15, and put into play a offsetting test of the opposite. That's actually another. It doesn't have to be bias up or bias down. It can be a reverse bias. And that's a much more common setup that we see trigger. But we're going to go through, there's different nuances. A grace period could trigger if the bias is still being overlapped at 10:15 instead of cleanly having triggered a bias or held a bias test, whichever one. But here I'll show you a couple of other examples And let's go back. So this is, for instance, this is Sunday night coming out of the weekend. Again, this is calculated. This is the bias down signal calculated as of Friday's close. Sunday night's open, gaps right down to the bias down signal. It's not a signal. We weren't signaling that it was going to do that, but coming out of the weekend right at the signal, that's an interesting setup. If you're trading overnight, it's some extra information to have. Actually the morning traded flat or traded up. This is the cash session open, traded up to the bias signal. Really didn't do much. And the afternoon didn't either, but because of some specific behaviors coming out of the weekend, because of Monday's session compared to the prior three, and then finally because of how the bias wasn't even touched post-open in the morning or in the afternoon, we were able to anticipate price almost literally exploding higher in the afternoon. This was totally expected because of how the bias parameters behaved in that other context. There are so many other influences. We're not going to be able to go through all of them, and I'm always curious to see which ones we're going to get at the next opportunity. So we'll see tomorrow. Tomorrow is tomorrow morning, but then also tomorrow afternoon for FOMC. Here's the 3-minute chart with the morning. I always leave the morning bias signals and parameters actually on screen. All right, so I really just want to go through an example of how an inflection / buy or sell signal, some of the different tactics to use. So one more point here. This lower line under the x-axis, under the charts, these are the timing windows. These are the timing windows that we talk about during the day as they become relevant. The opening, the first 15 minutes is 9:30 to 9:45. The first 15, the most volatile window of the day. A lot of people advise stay away, even past 9:45. Wait until the market has established what it wants to do. We actually find a lot of what I call immediately actionable setups because of specific behaviors going into the open, pre-open behaviors. We had one today. I mean, this is where the market opened. By the time we opened, the market was bouncing to 49, 46. And before that point, at 9:15, in fact, I had identified an immediately actionable buy signal at 9:47. In other words, upon first contact, we would anticipate that this is immediately productive by multiple points. It's intentionally vague because sometimes it's literally just multiple points, 3 or 4, and immediately retraced. And sometimes, of course, it's not productive at all, but other times it can extend. But the point is, because of the particular setup that I had going into the open, I don't want to wait. I want to take advantage because the pre-open activity is telling me, and I described, by the way, at 9:15 exactly why that's immediately actionable. No guesswork. I didn't flip a coin. I described what about this pattern told me I don't want to wait. If this is starting to turn up, and based on the Fibonacci's that I ran, if this is starting to turn up into the open, I want it. I want in. And if I'm just scalping, some subscribers, they just scalp. If that's all you want to do, that's what these are for. They are immediately actionable. If I label it, otherwise intraday, you can have your own strategy, but that's what the inflection is for. But that's one window, the first 15 minutes of volatility, before we see where the market does settle and tell us what it wants to be for the day, or for the morning at least. The morning bias window, that's 10:15 to 11:30. Bias window starts lapsing at 11:30 through noon. That's when it's finished lapsing. The noon hour is a particular window. There's certain behaviors because the people that are involved, the actual humans that are involved, and the machines that are programmed by humans, by the way, they have specific behaviors. They're there at the open. They've got a mindset and an agenda, and they're certainly not aligned with each other, but they're all there with an agenda to face the open. During the noon hour, everybody's got their own agenda, but the people who are actually involved during the noon hour, predominantly involved, there's a specific mindset, or everybody's got their own attitude toward the noon hour, midday. As we get into the close, there's a proxy window or the position scoring window. Everybody's got their own agenda, but they're all executing on a specific position squaring agenda. So that sometimes there are signals and sometimes there aren't. But when there are, it is a function of two things: the window and the price. So I'm calculating price with different Fibonacci measurements. And if you ask, if I haven't discussed, sometimes it's too busy, we're moving too fast, but if you want to know where am I anchoring my Fibonacci tool, why can't you get the same exact? Well, I'll anchor away from the errant ticks or the sentiment extreme. I'll come in and tick off the high to get the bid, not the offer. I have a lot more specificity, a lot more reliability in the levels that are calculable from those anchored points. So just the little techniques, if you want to know about that, you're free to ask. I encourage it. But I will be doing that live. That's how I identify these levels. But here's a interesting setup. This was the inflection. This was the buy. But as I pointed out at the time, it's probably a little healthier to see a pullback, not just to bounce to this level, but I would expect that if this is going to extend higher, that it's going to pull back. It didn't have to. At first it didn't, and it's a little surprising that it did, but it did. And that was healthier. And if you're trailing a stop, you definitely want to have a resting stop. I'm a big proponent of resting stops, not mental stops. You're never going to take a stop mentally where it needs to be taken, at least not consistently. And when things are moving quickly, it's going to move away from you before you pull the trigger on your stop. You can always re-enter if the stop proves to be just whipsaw, but not if it proves to be a collapse. So always have a resting stop, something that reflects your own risk tolerance or is built off of a red or green line. It can be one tick beyond that line, or 3 ticks, or 4 ticks. Whatever you think. 2 points. It can be a function of how much profit you've built up in the move, because that gives you a little bit more leeway versus how much more reward we're expecting or potential that there is. It can be a function of what kind of market. Midday, you can look back and see, well, let's just take a look at how much some of these limits were overlapped and did or didn't recover. I'm going to bring one more sidebar. These sidebars, by the way, they're very helpful and handy. And if you're a member, you'll see in the platform we're using, you're looking on YouTube, but members are able to see this in a live environment on an Adobe Connect platform. By the way, you're seeing this on YouTube, and there's latency. You'll notice tomorrow during the day there's lag. It could be 16, it could be 30 seconds lag. Don't go by this chart. If you're trading, have your own chart. Note where the levels are. The levels are there before price gets there. I don't label this after the fact. The signals are labeled before price ever gets there. And it may be changed, or I may move it just so I can see something else, but I'll leave it there whether it's, no matter what the resolution, I'll leave that there if it triggered or not, so long as it's pierced or touched. But just a point to make, you're going to be seeing this in, where is my, there it is. You're going to be seeing this on YouTube, but if you were in the Adobe Connect as a member, you'd be able to just click in a corner. There's a handy reference that pulls up these cheat sheets. These are the sidebars. As I'm changing the sidebars out, you can just pull this page up, and I'll link this page so you can see it on YouTube tomorrow. You can download it. There's the 3x3 test we're about to walk through. You can also look at levels. There's all sorts of levels to know or not know. I'm going to draw a line there anyway, but just to know what the levels are from. They're calculable levels. If you hold your cursor over it, by the way, it brings up a definition that you can look at. Inflection points, prior support resistance, etc. So anyway, those are the levels. Tests and timing, just again to reiterate, this is about prices and timing. So, for instance, if I say buy above 46, how do you know if something is relevant above 46 unless the timing window has closed and 46's test is maintained? If 46 is the buy signal and it's probed, but when the timing window lapses, 46 has been rejected, well, that didn't work out. We know that didn't work out. We don't sit there holding the bag. But that's just more of a concept. You won't need to apply this. Just understand the concept is not just about price. It's about price and time. And everything I discuss involves that. So you won't need to keep pinching yourself to remember. Tactics. We'll talk about that during the day, but take a look at them. Risk to reward terms, but also tactics. This does not want to. Here we go. We're about to go through some of the tactics for risk to reward. So these are the sidebars that I rotate through, but you can pull them up on your own through that cheat sheet. So let's look at an inflection. Let's look at a move. Let's look at reaction limit. These solid lines, whether it's a red line, green line, or blue line, solid, horizontal, not angled, but these solid, horizontal, blue, red, green lines are all the same thing, really. They're all inflection points. They're inflection points. They're just applied in different ways based on the situation. So if we're already tracking a buy signal, I have some rules. I don't just haphazardly decide that a specific, this isn't even the right measurement here. Hang on. So this isn't just haphazardly a buy signal. I had to see, in this case, a pullback limit for the previous trend. I had to see that violated. We can't be doing both. We can't be monitoring a long and its correction and use the same bars to trigger a buy signal. We can't be monitoring a buy and with the same bars triggering a sell signal. That doesn't mean that we can't be in a buy and take a sell signal, take a short. You can do whatever you want, but just know that the market hasn't yet confirmed that it is done with one direction, let alone reversing in the opposite direction. But each of these are just another form of support and resistance, and they basically, this is very important, this one sentence is very important. They identify the usual attention span of weak-handed counter-trend sponsorship. So whatever they are, the red, the blue, they're identifying the usual attention span of weak-handed, not just weak-handed, but counter-trend sponsorship. What is the usual attention span? I mean, we know what counter-trend sponsorship is. If this is in a buy, then counter-trend sponsorship is sellers. These are buyers. This is where buyers are so motivated that they're blowing through this resistance, this relevant Fibonacci retracement. In my work, this is relevant. If this is going to be exceeded by a certain amount for a certain amount of time, this, which we're about to go over, this, then buyers are in control. And the counter-trend sponsorship is sellers. Now, how do we know who's weak-handed and who's strong-handed? We definitely want to know who's strong-handed because that's usually who's going to win the tug of war. That's who wins. Here's a long. Here's a pullback limit. Who won this? Well, sellers won this. So these aren't weak-handed sellers. We're in a sideways day, so we're going to see a lot of chop. But that is either weak-handed sponsorship that holds that test and price recovers, the strong-handed sponsorship recovers and resumes the rally, or it's stronger-handed counter-trend sponsorship taking control. And this is where it all comes together, the usual attention span. The usual attention span is 3 minutes. I don't know why, but it is 3 minutes. Actually, during the first hour, it's 4 minutes. And actually, at any given time of day, it's arbitrary. But we have to have something, so we have 3 and 4 minutes. So 4 minutes during the first hour, if you look at the sidebar, 4 minutes during the first hour, 3 minutes any other time of day, that's the usual attention span. And during those 3 minutes, that counter-trend sponsorship, even if it's counter-trend, it can be really productive. Like this was counter-trend sponsorship, and that went from 51 to 45, 6 points. We've seen even more substantial counter-trend, weak-handed counter-trend sponsorship. Their usual attention span, they're done in 3 minutes. Go back and look, 3 minutes. 3 minutes. 3 minutes, and they're done. Now, it resolves to a higher high, doesn't extend, but still, 3 minutes. Look at how natural it is. I can't tell you how, not right now, how these levels are created, but know that they get 3 minutes of counter-trend sponsorship. After that, if they're any more productive than what those 3 minutes, what they were able to establish in those 3 minutes, they're not weak-handed, are they? They're strong-handed. So maybe we're still long. Maybe it's so close to the extreme, we're still long. That's where we get out. Whatever it is, everybody's got their own strategy. But we're no longer looking at longs at that point. We're looking for places to sell. This was 3 minutes. That held 3 minutes and recovered to a higher high. Not very long-lived, and it didn't really matter much in the real world. Execution-wise, if you're still giving that 3 minutes, you're still back down. If you got a trailing stop, you had an opportunity for something better. If you got back in, if your prior stop took you out. There's so many different variables here. My role is to identify the inflections and just how to interpret what they mean to the chart. But let's look at this 3x3 test. So the inflections can be entry signals or reaction limits. They can reverse direction or they can accelerate it. Here's first the immediately actionable buy signal at the open. Look at how it accelerates price. Here's an inflection that would have been a sell if it were breached. Look at how it reverses price. Again, these lines are here before price ever gets there. So weak-handed attention span, by the way, of the counter trend sponsorship, that's not just whose attention span is involved. That's also stronger-handed sponsorship being patient, letting weaker hands trap themselves. Now, this didn't turn out that way in this instance, but in fact, let's go ahead and get a trending day in here. So, and we really didn't have one last week either, but this Monday afternoon, yesterday afternoon, we actually did get trending. This was the explosion that we were anticipating, how price exploded out of that range. But before all of that developed, this was the chart. So there's an immediately actionable buy signal. I don't think that was immediately actionable yesterday at the open. Still productive, still immediately productive. It's still an inflection point, but not compelling, at least, to be long immediately. Here's a sell signal. The sell signal can be probed for 3 minutes or 4 minutes during the first hour to establish its extreme. Until that extreme is probed, we don't know that reinforcements have arrived. Here's a signal probed for 3 minutes. There's its high. Its reinforcements come in. Price comes down to the signal itself. It's never rejected. Got to be patient. That's one of the, if not the greatest skill necessary for successful trading. And that's patience. And then finally, there's a pullback limit, 1 minute, 2 minute, 3 minutes, sellers are done. But also, stronger-handed buyers are done waiting. Their patience is done. They wanted sellers in to refuel. Weaker-handed sellers, they know their attention span. They don't know it consciously, but inherently or innately, they're sensing that weaker-handed sellers are done, and the rally resumes. It's really the same signal, just had another inflection identified, so I labeled it. But the trend resumes. This never gave us an opportunity to count 3 minutes, because notice when you know 3 minutes is the usual attention span of counter trend sponsorship, and there's a chance that you're in a trending day, not a chop, then rather than selling into strength, maybe use those 3 minutes to add. Or if you sold into strength, re-enter based on where those 3 minutes got to. And if at the end of those 3 minutes, price is still down there, or when it returns down there. Bunch of different tactics. We discussed them in real time during the day. Nothing to try to be on top of at the moment. But the test, by the way, it's not enough to just pierce, or certainly not touch, but pierce a level. It has to actually be pierced by a minimum 3 ticks. That's the 3x3. 3 ticks for 3 minutes. Until pierced by 3 minutes, we don't start the 3-minute countdown. Or during the first hour, until pierced by 4 ticks, we don't start the 4-minute countdown to establish how extreme buyers were. Where that weak-handed counter trend sponsorship was done, or the strong-handed patients sitting back and letting them, as they say, have the rope to hang themselves. So once it qualifies with the minimum 3 or 4 ticks, we count down, we start the countdown, 3 or 4 minutes, 3 minutes, except for the first hour, 4 minutes. And exceeding that 3x3 extreme, that's reinforcements. Or in the opposite direction of the trend, that's the violation, that's violating. But look at how much sellers were able to accomplish, just the weak-handed sellers. The bounce never resumed, so we didn't get, that's why you need to have a stop, a trailing stop, or something that reflects your own risk tolerance. All right, so there's different applications. It gets a little complicated. I cannot reinforce enough. You're really not going to sit here and read any of this and turn right around and apply it. It's just not going to happen. And I can also I can't reinforce enough that you're not going to be able to apply it nearly as quickly as you can if you're immersed in it. Your learning curve everybody's learning curve is traveled so much more quickly by actually being involved in the live environment as it's developing, not knowing where it's going and looking back, oh yeah, look at that signal, look at how that played out, but seeing a signal be probed, seeing price come to a signal, react to it, this bar, in retrospect, there's a bar. But as that bar is forming, it's a tick, it's several ticks, and it dips back. There's so many different real-world behaviors that you can't portray or sense on a chart, looking at a static chart. So I believe that's my final point to make, is as much time as you can spend, and by the way, it's guaranteed to be busiest during the first hour. If you only have a little bit of time to devote during the day, the time to devote is the first hour or the morning, if possible, or the morning and the close, or of course, if possible, the entire day. But the morning or the first hour, first 90 minutes, you're going to definitely be most assured of catching more examples and more commentary to know how price is developing. Let's see if we can find another. So here is last Thursday. Thursday gapped up. Chop during the morning. But actually, it's not happening in a vacuum. Remember, we've got our bias parameters. So on Thursday, we see that resistance that price gaps up to, the bias up target. That was the higher of the two green lines is the bias up target. The lower is the signal. Didn't even touch the signal. Leapfrogged right over the signal Thursday morning. And we know that at 10:15, we were overlapping the bias up target. Plenty of opportunity to have already exceeded it and what I call renew. That would have renewed the bias up. That would have told us, like this bias up target was exceeded Wednesday at 10:15. We fully anticipated, by the way, for some other reasons, that we were going to be trading down Wednesday. We fully anticipated primarily because of how Wednesday's first 15 minutes behaved, that this would be ultimately a bearish day. But because of what happened at 10:15, the bias up target was exceeded. We knew there was going to be a detour up. That's how the bias can help, without even trading the bias parameters, just how they can be informative. So back to the more granular look of the 1 minute. I'll still identify inflections. I don't know to what degree the parameters are going to be exceeded meanwhile. And if you're a scalper, you want to know these, and I'll always have them on. But ultimately, and did I just switched to Thursday? Sorry. There you go. So there's Wednesday. Trading down, discernible downtrending during the first 15 minutes. There's usually some kind of bar tab to pay for that. But signals trigger, that doesn't mean if you're an aggressive trader, you're right there. I don't encourage front running a signal. If the signal is 49.18, then the trigger at the earliest is 49.1775, one tick. Or if you want, some traders will be more patient and watch a probe of an inflection point and see price come back to it and negotiate some better entry or monitor it for something. That doesn't always work out. No one tactic always works out. But it's just another way to be more discerning. Decide you really, when it comes down to it, your trading plan isn't necessarily deciding which trades you're going to take. It's also a matter of deciding which trades you're not going to take. Not everybody wants to be involved in a immediate entry. Stalking, especially as you're learning, can be a more satisfying experience. So, for our purposes, just being able to look without live action or too much live action, and without being able to really get the feel for the Fibonacci's. What's really, really interesting about the Fibonacci tool is applying the Fibonacci when, or the scheme, before price ever gets there, and then seeing how it interacts. Because I don't leave the Fibonacci's on screen, we just wouldn't be able to see price action after a while. But so much to experience. Starting at 7 a.m. If you're not available at 7 a.m., we do a 20-minute plus and minus, mostly plus, frankly, overview. The first 10 minutes, roughly, is ES. And after that, we go through other markets, currencies, metals, interest rates, energies, specifically crude oil in the 30-year, and crypto. And that recording is available pretty much immediately, pretty quickly. Then at 9:15, I do suggest being present in real time at 3:15. I'm sorry, 9:15 for the pre-open update. But that's where we see what's happened since 7 o'clock and what we did the strategy at 7. We're going to do the tactics at 9:15. I'll be able to identify immediately actionable setups if there are any. And then at 9:30, it's just nonstop. We do, I don't talk to hear my voice during the morning. I like to keep describing things so that we can be one with the market. But if there's no action, there's nothing to describe. The market shouldn't be that kind of a burden. But those are the important times. And then before the close at 3:45, we do the market wrap. All of these are recorded if you need to see those three. But if you are not a member and you're going to join us tomorrow, all day Wednesday, I don't usually do all day when I do an open house, but tomorrow's the FOMC in the afternoon, and that's always exciting, and we get to see, it's kind of a lab. With the more volatile the more it's a lab that gets to review or see so many different setups and influences on display. You're going to see at 7 o'clock maybe that there's been some overnight action that predicted some post-open action that I have a setup, a label for it, where we anticipate some very specific behavior and ratio. But we'll be doing all day Wednesday this time, not just 2 consecutive mornings, but also Wednesday afternoon. But come back Thursday morning, and we'll have usually the day after FOMC events the morning is pretty volatile usually, and we've got ISM and PMI, a lot of catalysts, and then of course probably Thursday afternoon won't be too busy with employment situation coming Friday afternoon or Friday morning. The Thursday afternoon before that tends to be paralyzed by anxiousness. But open house all day Wednesday, and then Thursday morning. We're probably going to go back to just mornings. Let's see how this goes. But every 6 to 8 weeks, I do a couple of consecutive mornings. Just one click, come on into the room. You don't get real time really unless you're a member and logged into the real time platform on Adobe Connect. There, it's latent. I mean, I'm looking at, kind of glancing out of the corner of my eye at the quote-unquote live feed, and it kind of looks, I mean, look down here at the timestamp in the lower right corner of the chart. Compare that. That's what time it is right now as I speak. What time is it really as you're watching this? We'll see if we can't get, sometimes I can bring the latency down during the day, but you really need to be a member if you want to get literally real time. And if you remember and you know someone who might want to see without bothering to register for a free trial, this is a good opportunity to send them to the YouTube channel tomorrow and Thursday. But that's it. If there's any questions, please ask. But that's it for me. There's so much here. Again, nothing you need to know beyond, I thought it would be interesting or helpful to have an overview of the different annotations, the different behaviors, and our different processes, just to kind of get over that hump. So maybe that'll help absorb as we're implementing this in real time tomorrow. I don't advise trading in real time initially. Certainly as you're working on your trading, I always suggest a virtual environment. You're just not going to be able to internalize the lessons and observe what price action is doing when you have money on the line. You're thinking about the effect on you. We need to be thinking about the effect on the market before we start trying to anticipate what it can do for us. But this is a good opportunity to do that. Just stop into the viditrade, live stream. So, thanks everyone for stopping in for this primer, and I will see you tomorrow morning, Wednesday and Thursday, 7 a.m. Or just check the chat when you sign in on the YouTube stream, and I'll have a link to the recording, whatever the most recent recording was there, in order. Have a great night, everyone. Take care.